traders, this is Robb Reinhold and this is the Trading Room. We are going into Thanksgiving week, so happy Thanksgiving to all of our US traders. Canadian traders, I'm sorry I did not wish you a Canadian Thanksgiving last month. This is a belated Thanksgiving to everyone. Let's go ahead and jump into it. Now, we just got done with monthly options expirations, so we're going to go over what happened this week. And we had a lot of big news on the inflation front this week. Huge news. We'll talk about that. Did anything change technically? We always love to talk about the news, but we don't care unless it's followed by a technical change in score. And we're going to take a look at some of our favorite sectors on the long side and the short side and pick some trades for the week.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
Taking a look back at last week, let's talk about what we saw. We saw the third straight up week in the markets, and we actually had a 10% correction from September to late October, and that's gone. That was the quickest recovery of a correction in the last 10 years. Why did it do that? We had dramatic reports out of the CPI and PPI. We'll look at those in just a second. What that did, it made the bond yields fall lower. We're now below 4.5%. If you remember, last month everyone was freaking out that we were going to top 5% and maybe run up to 6%. Well, guess what? The market has completely turned around because the inflation story has completely turned around. And that is the report that I really want to focus on. Take a look at this report. This report is very, very critical because there's been people that are saying, hey, inflation's not done. There's people saying that it is done. And we've had better numbers over the last couple months, and we still had people digging in their heels saying, no, inflation's still a problem. It's coming back. This number pretty much seals it, that we have no month-over-month inflation. We actually have falling year-over-year inflation. 3.2 is still a little more than the Fed wanted to be, around 2.5. But the core rate is falling. And then if you come down here and you take a look at the PPI report, that's crazy. We're now falling 0.5%. Now look, most of this is due to energy prices. We're going to look at the energy sector. There has been a big fall, but there's no question the inflation story is that it's really pretty much under control. The big question is, did the Fed slow the economy down so much that we're going to go in recession? Well, we did get better than expected retail sales that says, no, probably not. So all in all, this was a very, very bullish week for the markets. And it was just a confirmation of the run that we had that started about 3 weeks ago. Let's check in on last week's trades that we shared. First one, we were long Meta. We talked about how Meta looked really good, breaking out above this, and sure enough, it did break out above it. And Meta was up about 2% for the week. I went ahead and closed my trade for a max gain on this one. But Meta looked like a really good trade, and frankly, it looks like there is more to this trade. Next up, we had a short in Moderna. As you can see, Moderna said, I'll go ahead and have a bounce along with the market. Moderna bounced about 9%. I had a diagonal put spread. That diagonal put spread is down about 45%. So look, we know that in a rip-roaring bull market, all of our bearish trades are going to suffer. We know that. We accept it. We just need to make more money on our bulls than we do on the bears that drag. The next one was Aflac, and we had a diagonal call spread on this one. So this one went up 0.4%. So that is perfect for a diagonal call spread. Look, if it ran up any more, we wouldn't have made as much money. So this one looks really, really good. I still have the December long calls on this one, and I think this one is looking to go higher along with the whole financial sector. Next up, we had a bullish trade on CrowdStrike. CrowdStrike was up 5.5% for the week. And you can see just a really nice price action. This trade has one more week left for me, but it's already well into max gain territory. And I was looking at the figures, and there's only about an 8% chance that I don't get max gain by the end of next week. And then we had a butterfly on BP, British Petroleum. And we had a 36 butterfly. So we had the 36, 38, 34 butterfly. We want this to close at 36. And you can see it is coming back right up into that area. This trade is now profitable. And as long as we don't get some crazy move next week, this trade also expires next week. This one's looking really good for the portfolio. Let's take a look at the weekly market numbers. As I said, the market had an up week. We had the Dow up 2.1, S&P up 2.2, and you can see the Qs up 2% as well. So pretty much a solid 2%. And then we take a look at the Russell and we say, wow, 5.4% for the Russell. Look, the Russell's just super volatile right now. Last week, all of the markets were up and the Russell was down 3.5%. So this is just playing catch up. If you can see, that's literally 2%. It was exactly what the rest of the market did. Oil at one point was down about 4% for the week. It bounced back on Friday. And gold and silver have been continually moving higher as the US dollar has fallen a little bit. Let's take a look at this S&P chart and see, do we have a trend change? Do we have any change here? If you take a look at what's been happening here, we've had rallies up to resistance points where we base and then we break through. As you can see, we are literally doing the same thing here. I'm looking at this chart and I'm thinking about where we are in the part of the year. We're going into a holiday weekend. Now, holiday weekends are typically more bullish than bearish. And the Friday after Thanksgiving is the most bullish day of the year historically. Now, let me explain what I mean by that. It is positive more than any other day in the year over the last 100 years. Now, before you get all excited about that, the average gain on that day is something like 0.1%. So look, it's a half day. It's a boring day. Most of the time it's up, but it's not up very much. This week is really the same way. This is generally an up week, but it's usually on the very low end of actual percentage gains. I think that's a perfect setup for where we are. We're hitting up against resistance. We've spent a lot of energy to get there. I like this week for a pause. I really like this week for just a good, solid pause while the market consolidates these gains before it can move any higher. Over here, looking at the NASDAQ, we can see that it is even stronger, and we had a gap up and we're basing here. I think it just needs a little bit of time. We do have a 20-50 moving average cross, which we did not on the S&P. So the NASDAQ looks even stronger here. But that being said, I still think that if the script looks like we're going to have a pause here while we just consolidate some of these gains. And looking at the bond market, as you can see here, we were up at that 5%. We turned down, we've low based, and now it looks like rates want to go even lower. We're down at 4.44%. This is a game changer for pretty much everyone who is looking at the market. At 5%, they were looking at having to unwind positions. Now they're saying, hey, we're underinvested in equities. And that's why we're seeing this bounce back into the market. So next week, let's talk about a holiday trading week. The markets will be fully closed on Thursday. Monday, Tuesday, and Wednesday are full days. Closed on Thursdays, and Friday is a half day. It's going to close at 1 p.m. Eastern Time. What are we likely going to get here? I think we get some consolidation. However, I don't see any reason for selling here. What we could get is a float up. We could get like a rising base where it's not fast, but every day it's like we're up a little bit, we're up a little bit, we're up a little bit, up a little bit, to where maybe by the end of the week we're up 1% and it was a 0.2% gain every single day. I think that's the kind of week we could have, or we just go flat out sideways. That's my call. That being said, we are definitely in this environment of performance chasing. Some years we get it, some years we don't. This is definitely a year where if people miss out on this rally, let's say the market rallies into the end of the year and fund managers are sitting on capital that they didn't deploy, they're going to miss their benchmarks. So as the market goes higher, it kind of forces them to chase those benchmarks. That is what performance chasing is. On the schedule, really the only thing I see that's even remotely interesting is durable goods report. But guess what? That's not even all that interesting. We do get unemployment claims a day earlier since the market is closed on Thursday. But look, none of this matters. We are just in the holiday week off of a very strong market. No reason at all to sell. And frankly, there's probably more reason for people to buy this week. So the big question is, did we get a technical change? And we are so close to a technical change. This 50-day moving average has flattened out. If you got out a microscope, you might even be able to see a sloping higher 50. I'm going to wait one more week here. I want to see that 50 actually turn higher to where I can see it with my eye without a microscope. And I also would love to see a 2050 cross on those moving averages. So look, we're at a 2, 2.5, whatever you want to call it. I think the market looks really strong here. I've got us as a plus 0.5 for the week. So I think we get that rising base, kind of like what we've seen over the past 3 days. And here's this rising base. As you can see, each day is a little higher than the one before, but it's really stuck in this range, but it is going higher. I think we could easily drift higher and then setting us up for a nice rally into December. Let's go ahead and take a look at the sectors. And you can see that the sectors really, everything did well this week. We'll look at the outperformers, we'll look at the underperformers, and then we'll go ahead and score all these one by one. Best performing sector was real estate. You can see utilities also did well. These are direct plays on falling interest rates. These were hammered as interest rates were up at 5%, and they've had really nice bounces here on the way back down. Everything else was right in this 2.5 to 3.5 range. So let's take a look at what was not in that range. I want to first point out tech. All right, tech technically underperformed last week. Now, is that something to worry about? No. Why? Because tech has outperformed every week up to this. Look, sometimes these things get a little tired. We saw a lot of money going into tech early in the rally. Now it's broadening out. I don't think there's anything to worry about tech here. Energy, we took a look at that last week and said, hey, this is the most shortable sector here. And guess what? It is still the most shortable sector, along with healthcare. Healthcare has been in the negatives on our score for the last couple of weeks. It is still in a negative. So really, energy and healthcare are going to be the best places for a trader to go out and find some bearish trades. Let's take a look at each sector, score them. Again, our criteria is it above the 20? Is it above the 50? And are both moving average lines sloping higher? Well, on utilities, yes to the first two, but no. We do not see a slope higher on that 50 yet, so we are at a +2 on utilities. Comm services. Comm services last week was a +2, and we now have the cross. We now see the 20 above the 50. We see that 50 is clearly sloping higher. And yes, this is a +3 sector. This has been one of our favorites. Real estate went from a 0 to a +2. Again, we do not have the 50-period moving average, that yellow line turning up, only giving us a +2. Here we have healthcare. We have bounced back into the middle of the range, but you could see both moving averages are still falling a little bit. So we're going to give this a -1 on healthcare. Moving on next to industrials. As you can see, industrials blew up past its 50-day moving average. We don't have a turn yet or a cross, so we're going to give this a +2 on industrials. Financials have been one of my favorite sectors, and just a nice breakout of a high base. I mean, this is just a beautiful breakout. Last week I put financials on the top of my list, and it was a really decent performer this week. So financials gets an upgrade to a +3. We have a clearly sloping upward bias on that yellow line. Here we are in consumer. Consumer's a +2. It looks good. You can see above the 20, above the 50. We just don't have the turn yet in those moving averages, which is why it's still at a +2. And tech last week was right on the verge of being a +3. I said, look, give me one more day and I'll give it a +3. And you can see it has earned its +3, one of the strongest sectors out there. Last week, we had materials at a 0, and you can see materials have broken out above all the resistance points and above the moving averages, +2 on the material sector. And then we come here to energy, and look, energy had an up week, and it actually was pretty impressive that it had an up week because the price of oil was at one point really, really ugly, and a lot of these charts looked pretty ugly as well. As you can see, a little bounce back of 2% on Friday saved it from being a negative week, but this is still a very negative sector. Last week it was a -3, this week's a -2, still a very shortable sector. So if we rack and stack them here, what got up to a +3? Well, we have 3 sectors now to +3, comm services, financials, and tech. Everything else moved up to a +2. And our poor 2 sectors that are lagging the market, well, they got a little bump up, but they're still lagging the market quite a bit. Let's go in and take a look at some possible trades inside of some of these strong and weak sectors.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
We haven't done a trade in real estate for a couple weeks, so let's take a look at a real estate trade. Again, the sector's at a +2, which is, again, the market's at a +2, the sector's at a +2. So that means it's doing about what the market is doing. So if we believe that that's going to continue, we believe that this sector is likely going to do what the market is going to do, and which is, at least this week, go pretty much sideways. And then the next week probably go up a little bit. So I'm looking at this BK Holdings, or this I'm looking at this KE Holdings, and I'm really liking this range here. As you can see, there's some really good support down there at the 1460 area. So I'm going to be slightly bullish on this one because I'm looking at the 16 level as really being where I think this thing settles out here. So I'm looking at this range right here. I'm looking at the right here. I think there's where the stock is going to go. So this is slightly bullish, but not all that bullish. It's really more sideways than anything. So I'm looking for the 15, 16, 17 call butterfly, giving it 2 weeks out to December 1st. Just want this one to drift up a little bit. I don't think this thing's going anywhere. I think it's going to be slightly bullish. Next up in industrials, another sector that looks really good. Let's take a look at GE here. Now, when I was a young trader, these were the hardest trades to get into. I literally could not do it. And I would just sit there and watch them and watch them and watch them. And they would just run away from me. And I'm like, well, where's the entry point? And I learned that sometimes you just need to get in. Sometimes you just have to get long. And we have a saying at Maverick, when you don't want to get in, but the market's going up, sometimes you have to plug your nose and buy anyway. This is one of those times. Now, how you buy these is really important because in every technical book, this is overextended. It's been overextended for a while, but it keeps going higher. So the question is, how do you get into these kind of trades and not get scared, not lose your money, not have to sit through a pullback? I mean, there's so many things to think about. This is where I love diagonal spreads. And I absolutely fell in love with diagonal spreads because for years after the dot-com crash, I became a perma-bear. I made a lot of money in 2000, 2001 because I love to be short. And I was so scared to be long because I just saw this market fall apart in every situation. And I was scared to be long. And I would see these trades and I'm like, I'm not buying this. I'm not going to be the idiot who buys at the top. But I knew that I needed to get in them. So I fell in love with the diagonal call spread that is the wimpiest way to get into these. So on this trade, I'm looking at this 120. And I'm just looking out till this Friday. So as you can see, that's virtually where the stock is. I could get into this position and I will be bullish. And my break even is probably somewhere around 118. As you can see here, this isn't even really all that bullish. If this thing keeps running, I actually make a little bit less. I'll make a little bit less. I'll still make money. But I'm trading this for 5 days. For 5 days. If it pulls back past like the 118 area or wherever my break even is, that's when I'll start to have a loss. And that's what the trade is. So the trade really isn't a directional trade. The trade is saying, I don't think it's going to go below 118. And if I'm right on that, I'm going to make money. Does everyone see how much easier that trade is to make on an overextended stock than it is to, hey, I need to get it right and this thing has to get to 125 in a week? That's a very, very difficult trade. So this is where I absolutely love diagonal call spreads, because they let me enter these trades like this. Now I'm looking at the 121. So I'm looking at giving this a little bit more bullishness. You could just do the 120. I'm going to do the December 15th, 115, November 24th, 121. You could do a targeted butterfly out to December. There's lots of strikes available on this one, so you can really put together any trade you want. But again, I just want to get bullish some of these really strong stocks, but I'm going to do it in a way where I don't have to be perfect. Moving on to financials. Here's another one. Really the same situation. This KKR, it is a very, very strong stock in a strong sector. Everything is overextended in this sector. Everything. So how do I possibly get into this? Well, diagonal call spreads. Diagonal call spreads where you say, okay, you know what? 67. Literally like right here. 67 is going to be my per point. If it breaks below 66, yeah, I'll probably have a loss. But again, you don't need this thing to keep going. You don't need this thing. You just need it to not pull back too far. That's it. This is not a super aggressive trade. Now, this is what I love about these because, again, I'm doing this for 1 week. I'm going to sell the next Friday's option, but I'm going to be long the December 15th. So I'm going to sell the 68. And let's say this week, let's say exactly what I thought is going to happen happens and the market just barely creeps up. And by the end of this week, this stock's at $67.50. Well, my 68 expires worthless. I now have a 65 call that's already profitable, and I get to keep the premium I got for this, reducing my cost basis. I'm in a really good situation for when I think I get the breakout. I can just stay in these long calls. That's why I love these trades so much, because it really gives you the ability to get in for a week, even though it's a little extended, let it base, and then when it's ready to rock and roll, you actually have a more aggressive trade on the line. We haven't made a trade in materials sector for a while, so let's do it. Boy, this chart looks almost exactly the same as KKR. This is Vale, and again, Vale high base, and the same thing. You can play this. Look, I would never play this super directional. I would never say this is the perfect time to get in because it's about to run up to 16. That is not true. That is absolutely not true. So how do you get into a trade in spite of that? Well, I'm looking at the 13-15-50 diagonal call spread for 1 week. It's just a 1 week trade. For 1 week, I'm looking at this trade. And at the end of the week, I will have this December 15, 13 call. Now, look, if the stock doesn't look good and it looks like it's going to pull back even deeper, I'll just dump it. I'll just dump it. If it takes off and runs, you know what? I made a small gain in 5 days. I'll go find another trade. But if it hangs out in this area, I'm really happy about that because I now can just decide to hold this. I can sell the December 1st 1550 again to bring in more premium. I have so many things I can do. As you can see, it's so hard if you just have a binary way of looking at a trade, meaning I have to be like all the way long or all the way short. These kind of markets are really tough. If you have other strategies where you can say, hey, I can put this trade on. I know it's not going to go any higher, but I want to get more bullish. this is a great way to do it. And then you set yourself up for later in the month when it gets more bullish. You've got these long calls at good cost bases with some money in your pocket already. It's just a great situation. If you have any trades you want to share, Maverick Traders, you guys know where to go. Log into the website, go to our members area, jump on the forum, share trades. We'd love to see our traders working together. Wrapping this up, we are going to be on Thanksgiving break this week. Every year we take Thanksgiving off. We take off from everything that we usually do except for risk management. We are absolutely still 100% here for our traders. If you are trading and have any questions, we are absolutely here. But other than that, I give our staff breaks from making videos, from all the other stuff that we do. So no videos this week, and we will start back up on Monday with our videos again. Everyone have a very, very happy holidays and have a good weekend. Goodbye, everyone.